think I'm giving them credit for holding on to some price mix. I think a lot of investors worry that price mix is going to fall through the floor. I think there's a chance that they will hold firm. They have the benefit of IRA. They're building these battery facilities in the U.S. Ford and Stellantis aren't doing it as aggressively, and I think they're going to benefit from that. Cruise, I do give them some credit for Cruise. A lot of investors don't. I know there's some negative news out of that from California. But I think you have to give them some credit for that. The stock has just been really underperforming. UAW is really weighing in on shares. I think UAW is a little bit overblown, frankly. I think the strike gets resolved soon. They're getting closer to each other. And I think the labor cost inflation, we've run our math, it's only about 100 to 200 basis points hit to margins, really. I mean, these companies have done a great job of automation and reducing labor costs. So a 30% increase to wages is only about 100 to 200 basis points of margin hit. I think they can manage it. I think this stock has just really been punished somewhat unfairly. And I think, compared to the D3, they are actually better positioned because of electrification. I don't believe there's a demand problem. I take them at their word that it's a supply issue. But, we'll have to see. We'll have to wait and see.
But if even Elon is suggesting that for the best-selling EVs in the country, there's a demand problem, you look at their performance over the last 12 months or so, it's off 20%. You're suggesting, let's just, back of the envelope, 40% upside coming through. So if that's over the next 12 months, what would facilitate that? Even if we see the UAW strikes going, their cost base increases, they've got a weakening macroeconomy. If they're having module issues like you're suggesting, their EV rollout's going to be absolutely terrible then. So where's the upside coming from? ICE vehicles?
Well, I mean, I don't know if there's an EV demand problem. I think they have a whole slew of models that are hitting soon. They're pushing the models by a couple of months, the launches, and that may actually help profitability. If you look at where consensus numbers are in 2024, I don't actually think they're too high. So it's really just an execution game. The stock is cratered because of UAW, really. A lot of this down move recently is because of UAW. That's going to get resolved, I think, fairly soon. So there'll be some upside there. The EVs that are about to hit, I think, are going to excite people. Now, maybe they have to cut some pricing on these EVs. They said they don't, but we're seeing, like you pointed out, that Elon is saying affordability problems. Sure, maybe they have to cut some pricing, but they're going to get the benefits from the IRA. So I do think there's upside here because UAW ends, and I do think the new EVs that are hitting the road soon should catch some excitement. That's something that has been not the story with GM, but they just have too many models that are about to hit, and I think that they could get folks interested in the name.